Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. Welcome back, everybody. Today we're going to talk about my monthly dividends and look over the patterns and trends, see if we're growing, and see how I did for the month. So let's start off with my overall dividends. So you can see from the chart here that my dividends are continuing to go up. So even in the markets shifting back and forth and kind of bouncing all over the place due to coronavirus, we actually are still growing our dividends, which is what we want to see, right? We want to keep seeing these bars grow as I invest more money. Hopefully I'm making better returns with my dividends. So we can go to the data here and you guys can see the numbers for April. So overall, you can see that I've been investing around the same amount that I normally do, putting in the funds. The size of my overall portfolio has been growing. You can see in the last month that we had quite a bit of market gain, and my dividend payouts are looking pretty good, right? So again, this is the column that I'm focused on, is every month, hopefully this number goes up. You can see month over month here, I made about 3% more than last month, which is great. My fund size, again, has grown, and hopefully we get to a place, many years from now where I can live solely off of these dividend payouts. That's the overall goal. Let's actually jump into my M1 account so you guys can see which dividends we're paying out. Let's start at the beginning of the month and work our way up. So Coca-Cola here paid around $4. Novo Nordisk, which is actually a foreign company, paid $4.43, but then there's taxes on that, so that $1.20 comes out of that. You can see that, some minor numbers here and there, but overall the biggest was Philip Morris, actually at $6.29. So kind of the tobacco companies pay out really good dividends. That's why I invest in them. Oh, actually, you see here Altria, the kind of sister company to Philip Morris, actually paid out a higher dividend at $7.56. So overall, my dividends are looking really good. I'm happy with their positions. But let's jump into my other analyses here, and we can see overall how I'm evaluating companies and what actions I'm going to take based off the monthly evaluation. So we have my dividend metrics here, so yield, payout ratio, and dividend growth. And then if you guys have watched one of my previous videos, I'll put the link in where I took like a 10K amount and kind of built a fake portfolio. I also looked at performance metrics. So I looked at revenue, net income, and total return. And then I also am adding free cash flow here. So one thing that this panic has taught me is that companies need to have solid cash flow, right? So if they are paying out huge dividends or doing a lot of stock buybacks and kind of sinking all of their cash into those activities and don't have cash on hand, they can't really survive a crisis. So I wanted to add free cash flow as a metric into my analysis. And overall, I wanted to add some performance-based metrics into my evaluation monthly. So that way I can make sure that even if a company has a great dividend, if I don't think their business is sustainable, it really doesn't matter, right? So I want to make sure that I am evaluating companies overall as a solid company, and then also looking at their dividends and their dividend growth. So that's what these performance metrics are added to. This looks slightly different than, my previous month's evaluation. So what I did is I kind of take, like I usually do, I take the average and the standard deviations, look at which companies are falling within or outside of those standard deviations, and mark the extreme positive ones with green and the extreme negative ones with red. Then I go through and evaluate all of those. So you can see that most of my slots here are blank, which makes sense in the notes section, right? Most of these companies are pretty stable, have pretty good dividends. I don't really see any actions to change, but certain ones actually have a fair amount of notes. So let's add a filter here and then filter out all of the blanks so you guys can see what I potentially might be doing with my portfolio. So looking at Apple, there's a low yield, but overall I think this stock, provides a very good return. They have decent free cash flow. and their payout ratio is really low, right? So I think Apple has room to increase their dividend. They've been growing it steadily, and I think they will continue to grow it at probably even higher rate. So I'm thinking that I will up my percentage in Apple. So Benjamin Franklin, this is a financial company, and this is actually what inspired me to add performance metrics. So like all of the news I've been getting about Ben is pretty bad, right? So their revenue has been pretty solidly tanking over the last 3 to 5 years. Their net income has been bad. Their stock price has been bad, but their dividend is decent, right? So what does that mean? I think this means I'm actually going to dump the stock. So I'm actually going to get rid of this. You guys can, let's go into my holdings so you guys can see how much I actually have of that company. So let's go by name here, and you can go and see Franklin Resources here. So if I dump my stock, I'm going to lose about $100, right? So I have currently around $565 in there. It's down around 15%. But overall, I think it's time for me to kind of ditch that company. I don't really feel attached to it by any means. I don't think it's a great business model for what I've been reading. Overall, I think that one's got to go. So you can see some of the other ones here. I'll cover the ones where I think I'm going to be getting rid of them. So Valero. So Valero actually is a energy company, and obviously their performance has been hit recently, but I also wanted to look at overall how they've been doing for the past 3 years. The main call out here is just their net income has been going down steadily. And then their payout ratio is insane, right? So they're having to borrow money basically to pay out their dividend. And that's definitely not sustainable. I think this dividend's in danger. We already saw with an even bigger company in Shell that they cut their dividend. If you look at my video, my previous video on dividend cuts, this is something that you don't necessarily want to be in that situation where you're holding onto a company that's not really doing great for their dividend, but then they go ahead and cut their dividend or suspend it or get rid of it altogether. And so I think Valero's dividend is in danger. And so I'm thinking that stock has got to go. The other one that I would call out is Watsco. So this is a air conditioning distributor in North America. So I think, again, their payout ratio is high. That's a first warning sign, but their dividend growth has been pretty good, right? But then what I see is they have negative free cash flow for the past 3 years. Again, they're probably having to borrow or dig into their reserves in order to pay out this dividend. And I just don't think it's very sustainable. I'm also not, I'm not heavily invested, or I don't know a ton about the air conditioning business and distribution networks of kind of the service model that they have. And so just the general unfamiliarity I have with the business also makes me want to kind of prune it from my portfolio. So again, let's jump back. You can see here, so the other two companies we just talked about, Valero, I'm actually up. I think I bought at a very good time. And so I'm actually up in the portfolio with them. And then Watsco, I would only be losing about $7 by selling them. So by freeing up these companies, I will be able to do these other actions and increase my percentages and my share in these other companies that I think have, better models, business models, better performance, better yields, right? So like if they're being kind of hammered in the market right now, this is something I want to look at and see if I can potentially up the amount of those stocks that I own. So overall, this is the monthly performance. Hopefully you guys got something out of this video. If you did, give it a thumbs up. Feel free to subscribe to the channel. Tell your friends to watch the video. As we kind of go through every month, I'll be doing these evaluations, and hopefully you can see how I might edit my portfolio based off of the metrics that I'm looking at. I tend to do this periodically, not too frequently because I don't want to constantly be changing my portfolio, but it is something that I think all of us should do, is continuously look at our portfolio and see if it still makes sense from the time when you started. I know these companies mostly are kind of buy and hold, but you also need to evaluate if something is going wrong with the companies or if you didn't do the appropriate amount of research to begin with. So stay tuned for another video. I might put out another video this week, and hopefully you guys are staying safe out there. I appreciate all of the views. And yeah, I'll see you again soon. Thanks, everybody.